My name is Steve, and over the course of the next 45 minutes, I'll be giving you a rundown on InterEntity transactions, and after that, I'll be opening the webinar up for questions. So if you do have any questions, you are in listen-only mode at the moment. If you could please put those questions into the questions area within GoToWebinar. Initially, just a bit about ourselves, about Orchid. For those of you who don't know us, we are a developer of Sage 300 third-party modules, and we've been operating since 1993. And initially started working with ACPAC, now Sage 300, in the mid-90s, and kicked off with the RMA module, which has subsequently been OEM by Sage. We've currently got over 5,000 Sage 300 sites worldwide in over 40 countries, and of those 5,000 sites, the average site is running at least 2 Orchid modules. And we currently have over 400 resellers in the Sage channel actively selling and supporting our products. Everything we've done has been developed in the SDK, so it's easy for users to pick up and use, got the same look and feel as Sage 300, uses the same security reporting environment, dump and load and the like. And as I mentioned before, we do have one module which has been OEM by Sage. The RMA module was OEM by Sage for many years, and we have our EFT processing module, which is gold certified. We do also have a number of our modules up hosted by Sage, both on ACPAC Online and Sage 300 Online. Our modules fit into 5 different categories. Collaboration and intelligence, which includes Info Explorer, Notes and Document Management Link. Automation and productivity, which includes Process Scheduler and Report Runner. Tailoring your system and integration, which includes our newest module, Extender, Data Views and Optional Tables. Streamlining financial processes, which is the area I'll be focusing on today, which includes EFT processing, inter-entity trade, and inter-entity transactions. And today we'll be focusing purely on inter-entity transactions, although I will run through the difference between inter-entity transactions and inter-entity trade and where they do work well together. And lastly, we've got operations management, which includes RMA, or return material authorizations, and bin tracking. So diving into inter-entity. Inter-entity is for companies or groups of companies that need to allocate expenses or revenue across multiple entities, be they funds, companies, divisions, anybody who is working with intercompany or inter-entity loan accounts. It extends as well through to cash processing, so bank transfers, receipts and payments can be entered into one entity, and the corresponding transactions can be then automatically created in the other entities involved. So very well suited to groups that are currently wasting hours or days each month manually reconciling their loan accounts and ensuring that all the mirror entries are created in all the entities and databases. And really what it's designed to do is keep all these entities in balance at all times, with the offsetting entries being automatically generated in each company or entity based on rules that you set up. And because we're creating additional entries in different databases, we've got extensive audit trail as well to ensure that you can trace any entries that you need to from one entity to the next. The key to inter-entity transactions is these configurable rules, setting up the routes, the loan accounts and the like. And once set up, it just runs in the background and the end users continue about their business in the normal way, entering transactions into Sage 300 as they normally do. And then if InterEntity picks up any transactions that span databases or span entities, it then kicks in and creates the related balancing loan account entries for you and creates additional entries in other databases where required. InterEntity goes a step further than that. It will also create new entries should you need them, and I'll run through scenarios where that may be required as well. So InterEntity is all about automating expense revenue and cash entries along with the offsetting loan account entries. It creates these loan account entries either within one database or across databases. And we do have two versions of InterEntity transactions, which I'll be going through in the next slide, which runs through the differences between the two, along with the third InterEntity module, which I'm not covering today, called InterEntity Trade. So it's operating at the general ledger level, and as a result, any module or software which is creating general ledger transactions, it'll work on that. So it's not limited to general ledger entered transactions or AP generated transactions. It'll extend to accounts receivable and third-party modules. So if you're running a cash book or fixed assets or service management module, and it is creating entries which are spanning entities, InterEntity will take that into account and will cater for it. It does provide a number of additional reports, both audit trail reports and management style reports. So for example, the multi-database version of InterEntity transactions includes an AP age trial balance and an AR age trial balance, which runs across all the entities within a group. So you get a complete picture of the risk profile at the group level rather than having to do it at the individual entity or company level. So it's keeping your entities in balance at all times in real time. It's doing it as the postings are taking place within the general ledger. So having a closer look at the difference between the different modules, and this particular graphic here comes from one of our newer knowledge base entries. So if you do need a copy of this, do log on to our website and pick it up off there. But what I'll be running through today is everything covered by this blue arrow here on the left-hand side. So the three modules include InterEntity Trade, InterEntity Transactions Single Company or Single Database, and InterEntity Transactions Multi-Database. We do have a bundle which includes InterEntity Trade and InterEntity Multi-Database, and we're finding increasingly that people are deploying both at the same time. And I'll mention a few scenarios where that is applicable and the type of thing we're seeing. So running through the different features over here briefly, the multi-database version allows you to hold entities in multiple databases within a group. The single database version allows you to run multiple entities within one company, or rather within one database. And the reason it can do it is that everything is balanced at a segment level within the general ledger, so either one or more segments. And as a result, you can have multiple sets of books running within one Sage 300 company, all of which are kept in balance at all times. The multi-database version allows you to do that within one database, but also keeps a track of transactions that should actually be sitting in other databases and will move them to these other databases where required. So what we're doing is we're creating the loan account entries, and we're doing this based on user-definable routes. And these routes, or the matching of the loan accounts, can either be a single level or can be multi-level. You may find that certain entities do not have a direct relationship with each other from a loan account perspective. They may be going through other companies, and you can set that up. And when InterEntity kicks in, it will then create these loan account entries and follow the trail that you've set up via these routes. We can also trigger additional transactions if required, and they include, so as a posting takes place to nominated accounts in the general ledger, we can have InterEntity create additional general ledger AR or AP transactions. And you would use that in the scenario where you want to invoice other companies within a group, or other entities within a group. So for example, you may be raising some revenue in company 1 and you want to pass some of that revenue onto company 2, but you don't want to do it via the loan accounts, you want to do it via the subsidiary ledgers. What you can then do is configure InterEntity to create an AP transaction automatically within the first company to recoup the or to pass on what is required for that second company. This is where InterEntity Trade can be used as well, because InterEntity Trade is all about situations where you have entities within a group trading with each other, goods and services either via AR and AP or via OE and PO. So in this scenario I'm talking about here, if you've raised an AP entry in the first company because you want to pass some revenue on to a second entity, you can then have InterEntity Trade create the AR entry for you automatically in that second company. We support GL account creation across databases. So that's a scenario where you're running multiple databases and you don't want to have to re-enter GL accounts in all your entities as you create new ones. And we can also handle what we call cash management in the multi-database scenario. So a bank transfer, for example, we would be entering into one company or one entity, and it will create the corresponding transfer within the second company, and this is all happening via loan accounts. We can also handle receipts and payments. So receipts, for example, company 1 may be receiving some dollars and is allocating those dollars against a debtor in company 2. That can all be dealt with one entry, and it will all flow through the related loan accounts and payments as well. So one company or one entity may be paying an accounts payable invoice in which is sitting in a different entity. We also have what we call two-step processing with receipts and payments, where we're accumulating or moving invoices, either AR or AP invoices, from one entity to another. And this is used for the scenario where you want to accumulate invoices into one entity for payment or receipt. A bit like national accounts, I guess, but now running across databases and working not just on AR but on AP as well. We do have extensive logging and reporting. I mentioned the consolidated trial balances across databases, and we also have extensive logging and restart capabilities, which is critical. So if a transaction does get processed in one entity, what I'd call the source entity, and the target entity receiving these transactions, if it can't receive the transactions for some reason, it may not have an open valid account period, there may be some other issue relating to it, I may not have set the auto GL account creation on, and that account, the required accounts may not exist in the target company. What will happen is it will just accumulate these entries, which you can then have a look at, and then once you've corrected the issues, via periodic processing, you can restart these entries and just finish them off. So you can continue to operate and process transactions in the source company or the companies that are processing these entries, and you can always finish off transactions at a later stage if required. So a key thing here is that you are processing the entries in the actual entities involved. And you do only need to load InterEntity transactions in source companies. So companies which are creating, or entities, databases which are creating these entries, you don't need to have InterEntity transactions loaded in the target entities. So having a look at some of the key screens or snippets of the screens. In the top right-hand corner, we have the segment that's being chosen. In this case, in the sample data, we've created a segment number 4, which is used for determining which entity a general ledger account is in. You can choose multiple segments. It's less usual, but we do have instances where sites have required multiple segments to determine the entity. We then create routes, and over here, in the middle over here, what we have is a route which is not a single level route. It's going from entity 2 to entity 3, but there's no direct loan account link between 2 and 3. It's all being routed via 1. So here it's going from 2 to 1 and then from 1 to 3. And we have the ability to define due to and due from accounts. So depending on whether debits or credits are being created to the loan accounts, it'll then go through to the relevant account. But more typically what we find is people combine the two into one account. So you just use the same GL account code for both the due to and the due from account in each entity. And down here is an example of a transaction that InterEntity has worked with. We've got a debit here going through to entity 3 and a credit to entity 2. And what it's done, because of the fact that we've got a multi-leveled route, is it's then created the related loan account transactions in entity 2, in entity 3, but it's also created some in entity 1 because everything had to be routed via entity 1. In certain instances where we are dealing with multi-database environment, and that's what we're doing in this case over here. We've got entity 2 and entity 3 actually belonging to a different database. What is happening here is those transactions are being reversed out of entity 1's database, and new entries are being created in entity, the database which contains entity 2 and the database that contains entity 3. For those of you who have worked with InterEntity transactions before, what we have done with version 2018 is we've beefed up the visual process flows to make it easier to do the setup. So we've included the areas which relate to other modules for Sage 300. So in this case over here with standard InterEntity transactions, we've got options to go into the general ledger area, because prior to setting up your InterEntity transactions, you need to ensure that the GL options, the segments, are set up correctly. You may well need an additional segment to denote the entity. You'll need to enter the segment codes that relate to that to your entities. You'll need to probably change your GL accounts, and this is where GL account code change comes into play very often in new setups. You also need to create some new source codes because InterEntity does require its own source codes, and you can define what those are. Having done that, you would then go into InterEntity Transactions and into the options area and define which segments are required. And there are a number of options within the processing area which define how it's going to work. You need to set up your routes. And if you're working with the multi-database version, you would need to set up a mapping of your segment values, your entity segment values, through to the relevant databases those entities actually belong to. What we can also do in InterEntity is use optional fields to override information. And where this comes into play particularly is where you don't want to store all the GL accounts relating to the target companies in the source company. So what you can do is, as you're processing transactions, is you can have InterEntity override account numbers using optional field values. And because of this capability, you can then start using InterEntity without the need to completely replicate accounts across entities. And so here you do need to do some work in the optional fields area, setting things up. And then from there, very similar to what we have above, except we now have the triggers area, which then defines the business rules associated with how we're to deal with these transactions. So here we have a bit more on the GL triggers side, and we can either work with triggers, allow us to create additional transactions, and they also allow us to substitute GL account values. So substituting GL account values I referred to on the previous slide, and just standard triggers are used generally to create new transactions. So I mentioned earlier on, you might be creating a revenue, an AR entry, or a revenue entry in company one, and you might want to create an AP entry in company one in order to pass some of that revenue on to a second entity. And that is then defined in this area over here. Now, if we jump into InterEntity, and what I'm showing you now is the standard sample data that we've got sitting up on our website. And this has now been reconfigured for 2018, so I'd encourage you to have a look at it and download it and use it. And what we've also done is we've created some demo scripts for you as well. So what I'm doing now is actually just going through elements of the demo script. So if you go up to the website, what I would encourage you to do is download the latest versions of all of our modules and upload the sample data. We've got Orc Inc. We've got a number of different databases that are included in the sample data to show the multi-database capability of InterEntity transactions. And it's simply a case of loading these different databases and then running through the demo scripts. You can then look behind the scenes to see how it's all been set up, and that's what I'm going to be doing right now. I'll run through a few transactions. We'll look at the flow running through different databases and different entities, and we'll then go behind the scenes to see how that has been set up. And I'll be using those visual process flows to show you exactly what we needed to do to set those up. So initially what I'm going to do is just go into accounts payable. And in accounts payable, I'm going to create a new batch. And what I'll do is enter an invoice for office supplies, which I'm going to spread across a few entities. What is popping up here as well is our document management link module. And what it can do is show any documents relating to transactions that you're currently looking at or entering. And it's a case of just dragging and dropping the associated PDF or JPEG or what have you, Excel spreadsheet, and it'll then tag this information within the screen to that, and it will then show up for the people who need to see it. The reason I mention this is it does work across databases as well. So you can drag a document in. For example, here I could be dragging in a PDF of this invoice and then have it accessible for people working in the other databases needing to see this invoice. And I'll choose vendor number 7900. And then a document number, a document total. And I'm just going to create a distribution here. And what I've done here is I'll just remove 2 of these. We don't need to see all these entities over here. So here I'm left with 3 entries going through to office supplies, the $40, which is staying in entity 1, $30 going to entity 2, and $20 going through to entity 3. Make sure I've got that all in balance. That's all looking okay to me, so I'll add that. And let's go back and post that. So it's created the GL entry from that, and let's go up to the GL. And here it is over here. As you can see, this particular transaction now spans entities. It's going from entity 1 to 2 to 3. If this posted as it stands, we would then end up with these 3 entities all being out of balance because the sum of the debits and the credits does not equal at the segment level. So if I now go ahead and post this, InterEntity will kick in, create those balancing entries for us, and will then create entries in the target companies or target databases if required. And we'll reverse those ones that are not needed in this source database that I'm working in right now. So here it is posted, and what we now have is the due to and due from accounts have been updated. So if we, for example, look over here at entity 2, we had a debit going through to the expense account in entity 2, and now we've got an associated credit coming through for the same amount. So entity 2's got the $30 over here. We've now got the offsetting loan account entry of $30 up here. Now, entity 2 belongs to a different database, so down here it's reversing that out. You can see the loan account entry is being reversed out along with the expense account entry. And if we then go off to entity number 2, and let's go and have a look at the general ledger. You can see over here what it's done is it's created the GL journal debiting office supplies and crediting the related loan account. So all of this has just happened as I've processed this transaction as normal in AP in the first company. What I'll do now is just run through another type of transaction at the general ledger level, and this time we'll be using substitution. So what I'm going to do is override the segment value. So let's go back into AP. And I'll process a transaction for rent. And at the moment, I'm just really running through the demo script. So you can do this yourselves at a later stage if you like. And let's put this through to Xside and give that another invoice number. And here's an example of document management link on the right-hand side over here, where we can see all the vendor documents associated with this vendor. And as I'm doing the data entry over here, if I've got a PDF copy of this particular invoice, I would just drag and drop it into the top box up here. And that would then be made available to people in other entities, working in other entities if required, just depending on how you've configured document management link. So let's make this for $100. Create the distribution, and you'll notice over here they've both come through, going through to entity 1. And I might just change these amounts so we can see the impact. We'll change that to 60/40. And what we'll do is go and override this optional field, subst entity, to segment value 2 or entity value 2 instead. And if we add that and post it, and then go back up to the GL, and let's refresh that. And here we can see that 60 and 40 coming through. At the moment, it's still sitting at, both of them are sitting at 1, because remember, InterEntity is working at the general ledger level. So if I go ahead and post this transaction, you can see it's doing a whole lot of InterEntity stuff in the background. And what it's now done is it has taken that $40, which now belongs to entity 2. It's taken that out through a clearing account, because we don't have an account called 6260-2 that only exists in the target database. And if we then go through to the target database, you can see it's then coming through via that clearing account, and then we are sitting with the debit going through to the expense account 6262 and the credit going through to the loan account. So that's showing you a scenario where we have used an optional field to override the way we've set things up, the way we've entered the data. Now what I'll do is just show you a bank-related or cash-related transaction. So we'll go off to Common Services. And what we'll do is we'll do a bank transfer. And let's transfer this from CCV. And what I'm doing is transferring it to an account in Entity 2 instead. So we'll choose this one here. We'll do this in US dollars. And let's make it 100 US dollars. And let's go ahead and post that. Now, it's created a whole series of transactions because what's happening now is it's being routed via the loan accounts through to Entity 2, and you'll receive it as an incoming transfer in bank entries in Entity 2. So if we now go through to Entity 2, and we go back into Common Services, here we have the transaction over here, the receipt coming through the receiving end of the bank transfer, and it's come via the loan account. So everything's being done just from that one initial entry. Now, to have a look under the hood and see exactly how this all fits together, what I'll do is go off to Visual Process Flows, and we will do that in Entity 1, because that's where I've been generating all the entries from. And under InterEntity Transactions, you would do the initial setup within the general ledger, and that is creating the segment required for the entity or segments, creating the segment codes, entering the loan accounts that are required, the source codes that we want to use in InterEntity Transactions, and then from there what we would do is go through to the options area. And what I'll do is just go through some of the key setup that's required. And on the processing tab, initially we have an option to either use InterEntity Transactions or not. And the question that does come back to us is, why do we have that? I mean, either you're using it or you're not using it. Why turn it on and off? And the reason is that if you are implementing InterEntity Transactions into an existing environment, you may find that your entities are not in balance. And if you've got InterEntity Transactions at work, it will balance all transactions. So you can't process a one-sided entry at the InterEntity level, bringing everything back into balance, because InterEntity will rebalance it. So if you do find yourself in that situation, what you'd need to do is just turn InterEntity off, process those one-sided entries to get everything into balance, and then turn it on again. And from that point onwards, InterEntity will always keep everything in balance. Now, I notice that I've got some questions that have come through. I'll just have a look at those. So the question over here from Fabian is, notice that the account structure used is only one segment. Can you set up the target accounts that may be using a different account structure and segment length? What we do have is the ability to override entire account numbers when sending transactions through to target databases. So yes, you can do that. It is a whole lot easier to manage if you do keep the account structures consistent But if that's not possible, yes, through the use of optional fields and the ability to override entire accounts, you can use completely different account structures in the target companies.
Steve, can I just interrupt on that? Also,
yes, sure.
in the triggers area, even if you're not overriding the full account, in the triggers area, you could trigger a entity with 2-digit value to an entity in the target database with a 3-digit value. But again, you would then need to map every single expense and revenue account to the associated amended, a different structured account. So whereas it can be done, it's quite a big job of maintaining the mapping table with every new account that you add that's involved in inter-entity transactions.
Right, thanks, Anne. Another question that's come through from Isabel, substitution by optional fields. Will that also work when the entry is generated in the general ledger and not a subledger? Yes, absolutely, that's going to work at the general ledger level as well. So what is happening is the subsidiary ledgers, where we were keying in those optional fields that we're going to be used for overriding, they then flow up to the general ledger, and it's at that general ledger level that all these substitutions and is where inter-entity kicks in. So it doesn't matter whether you're doing that data entry at the GL level or at the subsidiary ledger level. Okay, moving on then. On the processing tab, what we do have is the option here to allow inter-database processing. So you'll only see that if you've got the multi-database version of InterEntity. Other important ones here, create accounts when posting. So that allows you to only enter an account once and have it then replicate across other entities and databases as required. And another one, important one here, use date to determine period in. That is used for cases where you may have a group with differing financial year ends or different period ends. And what it'll then do when creating the transactions in target databases is it will use the date to default the new period and the new year in if required. We then have the different source types, source codes to be used at the GL level, and most importantly, moving on to segments. What we have over here is the telling InterEntity which segment or segments to use for determining what an entity is, and it will then use that to determine whether or not inter-entity transactions are required. It will then use this to assess whether we have an entry which is spanning entities. The cache management side, this is where you can set up with the multi-database version of InterEntity whether you want to set up bank transfers, receipts and payments, both the single-step process where you're just processing a receipt or a payment, or the two-step process, which, as I explained, is more along the lines of moving transactions or invoices between entities and then doing consolidated receipts and payments from within the consolidated entities or the entities which are receiving and the amounts and paying them out. And when those invoices do get moved, it's all done once again via the loan accounts. So having done the setup over there, the next step is to set up your routes. And I did go through a screenshot earlier on within the PowerPoint presentation. We did this multi-level route over here. So here we're going from 2 to 3. So here we're starting with entity 2. It's going from 2 to 1 and then going from 1 to 3. In most scenarios we've seen, we don't have multi-level routes. So in most cases, if you are doing a simpler implementation, each one of your routes would look like this. So here we've defined what goes from 1 to 2. And it's a bidirectional thing, so you just set it up once for 1 to 2 or 2 to 1. And from there, if you are working on the multi-database version of InterEntity, you then need to tell InterEntity what entity, where entities belong. So in this case, entity 2 belongs in OrcIn2. So I've been working in Orc Limited, and as I've done any postings there, if it's picked up any GL lines which relate to entity 2, it's then moved them across to OrcIn2. And I've got it set not to post automatically, but you can set that to auto post, and that's typically what people do. I haven't over here because I wanted to show you the impact of the of those entries before posting them. That's the one way of doing it. The second way of doing it would be doing it, doing these inter-entity transactions not by purely selecting accounts, but by overriding either segments or entire account values. And in that case, you need to do the related setup within common services first. And from then, what you would do is in the processing area over here, you would be defining which optional fields you want to work with for these substitutions and for these triggers. And the rest of it is fairly standard. We are working with routes, we're working with database mapping tables as normal, but we do now have the trigger setup area. And within the trigger setup area, here we're specifying that if any transactions go through to this GL account over here, 42131, what we've specified here is process a transaction to, in this case, the same account. So any revenue going into this account will be reversed out. And we're saying over here that we need to raise an AP invoice because this is an AP reallocation, and we're to raise that in vendor 9003. So in this scenario over here, what the could be happening is we're receiving rental revenue and we're creating an AP invoice to pass some of that rental revenue onto a second entity. If we had inter-entity trade, we could then have the related AR entry in the second database be created automatically. So that's a good example where, as I mentioned earlier, where the inter-entity transactions and inter-entity trade work well together. We can work with wildcards. So here we've got 6 stars, so any expense accounts starting with 6 will kick in over here. And what we're doing over here is we're using substitutions. We're using this optional field over here, and it's going to then go through and substitute the relevant entity value that you define over here. And this could either be as you're entering a transaction in AP, or going back to that one question we had earlier on from Isabel, you might be entering this at the general ledger level. So you just go in and change that that optional field, and it will then create the relevant account for you, or post to the relevant account for you in the target entity. And in the third instance over here, we have any entries going through to 72641 create an AR invoice in this case. So we might have an expense coming through to entity 1, and we want to recoup some of that expense from a different entity, but we want to do that at the subsidiary ledger and level and not the loan account level. Now, generally, where you do want to work with subsidiary ledgers and not the GL would be in instances where tax gets involved. So as you all know, the GL doesn't take into account taxes. So if you do need to record tax within entities, within a company group, and you do have these transactions flowing through, you may want to investigate the use of these triggers. And a bit further on triggers, what we do have now is visual process flow on triggers, just once again running through how all that setup works. I haven't spent that much time on triggers today because it's a much smaller proportion of our users using InterEntity are using the trigger capability. Most sites are just using the GL accounts being chosen to determine where things go. They're not using this override capability, and they're not creating additional transactions. So we've got about 10 minutes to go. So what I might do now is just open it up to any questions. So if you do have any questions, please enter them into the question area, and Anne and myself will endeavor to answer them for you. But just while we're waiting for those questions to come through, I'll go back to the PowerPoint. And we'd just like to point out that if you haven't done so already, have a look at our new website. We have just, if you log in, we have just uploaded fairly recently all our 2018 modules and new sample data and these new demo scripts, which people are finding extremely useful. So have a look there, download it all, and if you do have any questions or require assistance with any presentations, demos, or different scenarios, you may not be sure whether or not InterEntity is suitable for prospects or customers, please get in touch at info@orchid.systems, and our website, of course, is www.orchid.systems. We do have a question here from Ron. Anne, would you like to answer that?
So the question is, do all entities have to be in the same time zone? Thinking of date stamps on batches, etc. So all the entities do need to be on the same, well, accessible from the same server. They're not, the databases might not necessarily be on the same server. The programs might be running on different servers, but they must all have the same database, the main core system database. So a user is able to log on to both at the same time. So in which case, normally you would have, the timestamp of the server being what is used on, the program servers, which will be the one that's used on batches. So I hope that that's answered your question, Ron. It would really be the same time, GMT, or relevant to GMT that's being stamped on the batches. And then depending on the individual user's own profile and Windows settings, they would see that date and time in their own local zone.
Just to expand on that, there is a little used feature of InterEntity transactions which allows you to manually export batches that have been created for other databases. So you can actually export to file batches of GL transactions, which can then be imported onto other systems. But nowadays, with the improvement of speed and the like and bandwidth on the internet, we're finding that people are consolidating, and that feature isn't really being used. It's just for the GL area. It wouldn't be you wouldn't be able to use that for cash management because that is now working at the subsidiary ledger level as well. But I thought I'd just mention that.
Another question from Ron. If an entity has a locked fiscal period, will the transaction posting not begin, or will you have a restart error condition? So you would have the latter. You would have a restart error condition. So if, because the batch would post in the source company, and then in the audit trail, we would have a log of the batch to go to the target company. And if you couldn't create the batch in the target company because the period is locked, or because the account is missing, or because there's no available land pack to do the work, then what you would be left in the audit trail that Steve's now showing you, you would have a transaction status of error, and in the message error you would have a the actual error message. So it would say fiscal year and period is locked, for example. So once you see that in the audit trail, then you would go to the InterEntity Transactions Periodic Processing and tell it to reprocess, well, not reprocess, but to process error entries. So by selecting the process error entries and going process, it'll go through your audit log, see any, there might be a handful of errors sitting in there, and it will try and reprocess all of those errors. So assuming you've now opened the fiscal year and period, or you've created the account that's missing, it would then be able to create the batch. Or maybe there's another error, maybe the source code's missing in the target database and you need to create that source code before it can go through. So checking the audit area regularly, definitely before month end, but keeping an eye on it regularly to make sure that no errors are happening is a good idea as well.
Yes, great question there, Ron. I neglected to show you this. This is really a key area, particularly where you are moving across databases. You want to make sure that you don't lose any transactions along the way. And there are these different scenarios where the receiving database may not be in a position to receive particular transactions. And the way we designed the module was to allow processing to continue in the source database, but we would keep a record of all transactions that haven't completed. So the idea is that you would then go in and correct the issues. If we were dealing with a locked fiscal period, as you point out, you would go in and unlock it and then come back into this periodic processing area to reprocess those transactions which couldn't get through the first time round. Any other questions at all? I'm not seeing any others. So we are just about on the hour. So I'd just like to thank you all very much for attending, and I know that your time is very valuable, so we do appreciate that. We will be running an InterEntity trade webinar early in the new year, so keep an eye out for that. We'll be including that information in our next newsletter, along with the next email that goes out relating to webinars that we're holding. So be sure to attend that if you can. And thank you once again for attending.
There's just one more question, Steve. Sandra's asking for the sample data on the website. Sandra, if you just log in and go to the program, to the product downloads area, and then when you select the version you want, the sample data will be under that version in the same place where the modules are. Send me an email if you can't find it after this webinar.
All right. Well, thanks again, everybody. And if you do have any other questions, please don't hesitate to reach out and have a chat to us. Thank you.